Everyone's talking about QLDY, the ETF that pays twice a week. But does that actually add up to real income, or is it just marketing hype? I ran a $50,000 back test to find out exactly how it performs. So stay tuned. Welcome back to Simply Money. In this video, we're diving into what happens if you invested $50,000 in QLDY, one of the most talked about covered call ETFs right now. I'll walk you through how I set up the backtest, what kind of income it could have produced, and whether those twice-a-week payouts actually make a difference for income investors. Let's see if QLDY really delivers. Here we have our spreadsheet doing the backtest. We're going to be starting from inception date. This is a very new fund. For those who are going to say this isn't a backtest, it's a backtest as far as we have. I understand this is not a very long-standing backtest. There's not a lot of data to go from, but I did want to introduce this fund to show what it is capable of in this short time frame if it continues in this way. Whether it will or not, we don't know. We'll find out as we see different types of markets hit, whether the share price can uphold this, whether the NAV erodes, whether the yields continue to produce, or the dividends going to remain as consistent as they have been. We don't know yet. It's been a very short period. As you can see, September 18th, 2025 was inception. The share price was $50.53. That got us 990 shares. Again, that's our $50,000. As you'll see here on these first few weeks, there's no dividend. A lot of times funds that are doing this, it takes a few weeks for them to get the calls and the puts and then to start generating the yield that they're going to be distributing. On here, you can see it did not start the first distribution until October 1st. We're going to look at this and just break it down. These first couple weeks here, again, no dividend paid. So nothing really changes other than whether the stock price goes up or down. Before the first payment, the price had gone basically flat, had not changed a lot. Then it got up to the $51.15, paid its first distribution of 19 cents. Let's look at that real quick. 19 cents has been very consistent. 19.6, 19.7, 19.7, very consistent. The lowest here is 19.2, got up to a 20 cent here, and then down to 19.4. It's very flat, very consistent. Again, this is a short time frame. It's barely a month that we've been doing this, but because you're getting paid every week twice, you got the Wednesday, Friday, every week that it's been paying that 19 cents. And the share price is held up as well here. As you look, again, it peaked here at 51.15, dropped back down to 49, up to 52, down to 49. This is not NAV erosion right here in this short period of time. This is just market fluctuation that we're seeing. From beginning to end, you're down 2.79. Again, this is just over a month. Very small time frame to be looking at. So none of this really holds a lot of weight in the sense of how is it going to perform in the future. Even if you have a 10-year history, we don't know what the future will hold. We don't know if past performance will continue, but it does give you a better understanding of how the fund's performing through different markets, through bull markets, bear markets, pullbacks, whatever you have. So you can see the difference when you have more data. We don't have that. But again, I wanted to show you this just to see with this twice a week payment that you're getting, you can really start accumulating these shares as you drip, whether you're doing the full drip, 50% drip, or no drip. And we're going to see the difference is very minimal because it's such a short period of time. We'll see these exponentially grow apart, I think, as you get more data down the road. I'll do another one of these maybe in the spring, maybe after we've had 6 or 7 months worth of this so we can pull the data and look and see how it's performing. So let's look at the dividend payments real quick. You can see you started out your first payment at $193, even though the dividend amount has stayed very consistent. This has gone up slightly. Again, in a month, you've got a $7 twice a week. So if you look at this first payment and then you look at these last two payments, you're gained $9 and $5 on these two payments. So $14 a week. that you've gained just in that short period because you've added these number of shares. Every week you're taking this full amount, you're buying more shares, and you're adding those shares here. You're getting about 4 shares each pay period, each twice a week. You're getting that. So 8 shares per week you're adding. And that's going to just continue to go up again exponentially as this grows, as this dividend amount grows and this payment grows. You're going to buy more and more shares as we get further along. But in this short period, you've added 47 shares and you're getting paid 19 cents twice a week on 47 more shares than you were when you began. Now in the 50-50, again, for those who have never seen, this amount here is half of what this amount is on the first paycheck. Because the distribution was made, you're taking 50% of it and you're buying more shares. So you can see you bought 1 more share here. Where on this one, the full amount, you bought almost 3 shares. Now you have 97.02 that you're buying more shares with, but you also have 97.02 that you're spending. You can spend that on bills, you can spend that on more funds, other funds, but you're not putting it back in QLDY. So it's just simulating what it would be like if you took 50% of your drip. You can see it grew as well, but not as fast. And you're getting 2 of these payments, one of them being used to buy more shares and the other used for your living expenses. Comparing these two, you can see that you got $2,376. This one, you're getting $1,175 for more shares and $1,175 for expenses. So that's not too bad. And $50,000 investment in just over a month, you've received $1,175 of dividend. And that would continue to grow slightly as you're adding more shares. So even if you want to start out immediately taking some drip with this twice a week payment, you're getting some nice dividends and distributions sent your way. Now on this one here, this is 0 drip. This is the amount of your distribution. And you can see this one's not going to grow as fast either because you're not adding more shares. You have your 990 shares. So every time you get one of these payments, it's going to be multiplied by the 990 shares. Because this payment, this distribution has been pretty flat, it's basically identical for this whole month. You can see your payments are basically identical. It's fluctuated from 193, got up to 194, 195 here, 198, down to 191, but staying right in that $190 to $198 range. And as this goes up and down, this will go up and down slightly. But again, not a big change here. You're not seeing a huge fluctuation, which is nice for those who are looking for income, those who are looking for steady income for bills, for living off of. This makes it nice when you have this consistency. Hopefully down the future, we'll see that continuing to either stay flat or rise slightly. And that will be a tell on how this fund does. Now, we didn't look at this a whole lot, but again, the share price hasn't fluctuated much in this month. So our ending balance is staying pretty flat as well. With the full drip, we got up to 50,000, almost 51,000. So we gained about $1,000 here in our portfolio balance. 50% drip, our balance is down $251, but don't forget we also spent $1,175 on something else. And on our no drip, our balance is down just under $1,400, but we were able to gather $2,326 in distributions. Our total return on all of them is in the positive. Not a lot, again, for 1 month. If you average just each month, I think you'd be very happy with that. You're seeing your distribution and your fund balance. You're running just about a 1.8% growth rate total return on that. Now, again, I think as time goes on, if you're in the no drip, just like most funds, the no drip, you're going to gain less because you're spending part of it. You're getting gains, whether it's through distribution or in other funds where you're selling off funds. You're getting those gains and then you're spending them. With the full drip, you're just rolling it back in and you're accumulating more shares. And if this price stays consistent and this dividend stays consistent, you can see that really snowball down the road. We'll be curious to pull this again. We'll do this every so often, maybe again in the spring, maybe a year from now, we'll see it. and we'll be like, oh, this was a big mistake, but we don't know. We do these back tests just to give it an idea of what it has done and what it could do. For those who are looking for income, looking to generate cash flow, this can be a really nice fund being twice a week, and we hope it will stay that way. But just remember, word of caution, do your own due diligence. This is for informational, educational purposes only. This is not financial advice. But remember, this fund is going to pay twice a week, but it's going to be very volatile. It's going to be about 2x. So if it goes down, the underlying goes down, this could go down twice as fast. You're going to have to be prepared for that volatility. Those who are in the income-focused investing understand that volatility. They embrace it, and they look at those drops as opportunities to really rack up on the shares held. So when it does recover and these dividends continue, this distribution payment increases even faster. We don't mind dips as long as it does recover. And that's what we'll be monitoring on this, as we do with all of our funds. How does it respond after a dip? Does it recover? You can look at like QQQI, SPYI after the April 2nd tariff scare. The whole market was down and most everything recovered. Now, some ETFs did not recover. Their NAV came up but did not get back to that level it was before, where QQQI and SPYI, those have recovered. Things like this, we'll be looking at QLDY and seeing how it performs through different markets. What is your thoughts on QLDY? What do you think? Are you in favor of this? Are you cautious? Are you just watching it, giving it some time? Give it a track record to see how it performs. Let it go through a couple pullbacks in the market. What is your plan with QLDY? Are you touching it, leaving it alone? What is your plan? Share that in the comments below. Share with the community. It's great as the community shares their ideas. Everybody's going to have different ideas, different plans. I'm sure we'll get comments saying this is junk, leave it alone. There'll be other comments saying this is amazing. And everyone has their own opinion. That's what I always say. Personal finances is personal. You're going to have to make your own decisions. Make your decisions based on what your risk tolerance, what your goals are. And hopefully you'll find that whatever funds that you choose meet those goals for you. Now, that's what we have for today, the $50,000 backtest of QLDY, and we will monitor this one closely. Have you bought into it already? Let me know down below. I'm thinking about putting just a little touch of a position in this. Nothing big, just a few $1,000s just to see what it does and watch it that way. But if I do, I'll make a video and share that with you. As of now, I'm just watching from the sidelines and monitoring it and sharing the information with you, and share with us what you're doing. I appreciate you joining me, and we'll see you next time on Simply Money.